The globalization of world economics. The IMF regards economic globalization as a historical process representing the result of human innovation and technological progress. It is characterized by the increasing integration of economies around the world through movements of goods, services, and capital across borders. So in this chapter, we'll be talking about money and imports as well as exports of goods and services. The IMF and ordinary people agree that drastic economic change is occurring throughout the world. So it's very evident in the world right now regarding this economic change. The value of trade, which includes goods and services as a percentage of world GDP, increased from 42.1% in 1980 up to 62.1% in 2007. So GDP is also known as gross domestic products. It is the final value of the goods and services produced within the geographic boundaries of a country during a specified period of time, normally within a year. Increased trade also means that investments are moving all over the world at faster speeds. Because of technology right now, it's faster and easier and more massive to do transactions and trades all over the world right now. We should also note that the increased speed and frequency of trading these days, like the use of supercomputers, which can execute millions of stock purchases and sales between different cities in a matter of seconds through a process called high frequency trading. That's why if you go to, let's say, big companies, it's easier for them to make bulk transactions because of these supercomputers. Even the items being sold and traded right now are changing. For example, books today. Um, Before, if you talk about book, you are usually just referring to the bound papers. But now, book right now could be electronic, like when you talk about e-books or electronic books, which many people are enjoying at the comfort of their laptops, their tablets, or cell phones. Also, albums. Albums before, it refers to CDs, and people would usually purchase these in stores. But right now, albums refer to, let's say, electronic version, the MP3, a compilation of these MP3 songs, composes an album. So let's now go to international trading system. The oldest known international trade route was the Silk Road. So where is the Silk Road? It's a road uh, pathways from China, and it led to the Middle East until some parts of Europe. So this was the a trade route during the ancient times. So why is it called um, the Silk Road? Because it the most profitable item being sold there was silk, and silk was usually sold from China or produced from China. Traders used the Silk Road regularly from 130 BCE, when the Chinese Han Dynasty opened trade to the west, until 1453 BCE, when the Ottoman Empire closed it. Although it was international, take note it was not global, because for it to be called global, there should be a component which is about it should have difference in oceans, and then the route could reach, let's say, from Asia to the American continent. So that's how you can call something to be global. So the Silk Road was international, but it was not global because it had no routes that could reach the American continent. According to historians Dennis O'Flynn and Arturo Giraldes, the age of globalization began when all important populated continents began to exchange products continuously, both with each other, directly and indirectly via other continents, and in values sufficient to general crucial impacts on all trading partners. So a good example of this is the galleon trade, which is which happened around 1571. So this galleon trade connected Manila in the Philippines and Acapulco, Mexico. So that's in South America. So this was a concrete example of globalization already, because there were already different continents involved, traveling expanse of oceans, and it involved even to the continent of America. This was the first time that the Americas were directly connected to Asian routes. The galleon trade was part of the age of mercantilism from the 16th century to the 18th century. Countries, primarily in Europe, competed with one another to sell more goods as means to boost their country's income. This is called monetary reserves later on. However, this was a bit restrictive. It had multiple restrictions because there were impositions, especially by the monarchs, so the kings, the queens, the dukes, duchess, and all. They imposed high tariffs. They forbade colonies to trade with other nations, and there were restrictions of trade routes and subsidization of exports. A more open trade emerged in 1867 when, following the lead of the UK, the US, and other European nations, adopted the gold standard at an international monetary conference in Paris. So, take note of that, the gold standard. The countries established a common basis for currency prices and a fixed exchange rate system, all based on the value of gold. So this is what you call the gold system. It was still a very restricted system as it compelled countries to back their currencies with fixed gold reserves. Returning to a pure standard became more difficult as the global economic crisis, called the Great Depression, started during the 1920s and extended up to around December of 1930, further emptying government coffers. So this depression was the worst and longest recession ever experienced in the Western world. Partly what is to blame is the gold standard, since it limited the amount of circulating money and therefore reduced demand and consumption. Government could only spend money that was equivalent to gold. Its capacity to print money and increase the money supply was severely curtailed. So the gold standard was to blame because people mostly relied now on gold. So that is partly to be blamed because for the Great Depression. So if you check online on what is the Great Depression, many people actually suffered during that time because of financial reasons. Economic historian Barry Eichengreen argues that recovery of the United States really began when, having abandoned the gold standard, the US government was able to free up money to spend on reviving the economy. At the height of World War II was around 1945. It ended around 1945. Other major industrialized countries followed suit. So other countries started dropping gold standard by then and moving to another form of um, money valuing. So through more indirect versions of the though all more indirect versions of the gold standard were used until the late 1970s. Today, the world economy operates on fiat currencies, currencies that are not backed by precious metals such as gold, and whose value is determined by their cost relative to other currencies. For example, if you compare peso to dollar, the exchange rate is 1 peso is equivalent $1 is equivalent to 50 pesos. So if you go to America, you will not be surprised to see that the items are, for example, $10. So you need to buy it at 500 pesos because the cost is relative. So that's the concept of fiat currency. Now let's go to the different monetary systems. So after gold standard, we also have what we call as the Bretton Woods system. So it was inaugurated in 1944 during the United Nations Monetary and Financial Conference to prevent the catastrophes of the early decades of the century from recurring and affecting international ties. So it was largely influenced by British economist John Maynard Keynes, who believed that economic crises occur not when a country does not have enough money, but when money is not being spent and therefore not moving. Of course, because the gold standard, they mostly relied on gold. But for this one, they are emphasizing that there should be movement of the money, and the government plays a very important role for the movement of this money. When economies slow down, according to Keynes, governments have to reinvigorate markets with infusions of capital. So that's where the government comes in, the infusion of capital, so that the money in the country will start moving again. This system is also known as global Keynesianism from, of course, John Maynard Keynes. Delegates at Bretton Woods agreed to create two financial systems. So the International Bank for Reconstruction and Development, IBRD or World Bank, to be responsible for post-war reconstruction projects. So because this was after World War I and World War II, many countries were highly affected. So the World Bank was responsible for assisting these countries. And the International Monetary Fund, or IMF, which was to be global leader of last resort to prevent individual countries from spiraling into credit crisis. Economic growth in a country slowed because there was not enough money to stimulate the economy. The IMF would step in. That's why in the Philippines, we keep on borrowing money from IMF so that we will not fall or spiral down into credit crisis. To this day, both institutions remain key players in economic globalization. Shortly after Bretton Woods, various countries also committed themselves to further global economic integration through the GATT, or General Agreement on Tariffs and Trade, in 1947. The purpose for this is to reduce tariff or taxes, especially related to import-export, and other hindrances to free trade. So let's now go to neoliberalism and its contents. The high point of global Keynesianism came into the mid 1940s to early 1970s. During this period, governments poured money into their economies, allowing people to purchase more goods and in the process increase demand for these products. So the government was already spending money to their countries, give capital to people, and then produce certain goods which people would deem that they demand it, they need it. So as demand increased, so did the prices of these goods. Because many people were wanting to buy these stuff, let's say cars or something like that. So of course, people felt that they needed these cars, so the prices of these goods increased as well. Western and some Asian economies like Japan accepted this rise in prices because it was accompanied by general economic growth and reduce unemployment. Reduce unemployment because, of course, if you, let's say, create factories for cars, there will be more job opportunities for the people. The theory is that as prices increases, companies would earn more and would have more money to hire workers. In the early 1970s, however, the prices of oil sharply rose as a result of the Organization of Arab Petroleum Exporting Countries, or OAPEC, imposition of an embargo in response to the decision of the US and other countries to resupply the Israeli military with needed arms during the Yom Kippur War. So, embargo is not allowing trade, okay? So, embargo. So, they did not they stopped sending, let's say, oil to certain countries. So that's why prices for oil sharply rose, because these certain countries that were affected by this embargo system had to look for other means to get their oil. Arab countries also used the embargo to stabilize their economies and growth. The oil embargo affected Western economies that were reliant to oil. To make matters worse, the stock market crashed in 1973 to 1974. So why did this crash? This is related to the Bretton Woods system. By the way, the members of Bretton Woods is USA, Canada, Western Europe, Australia, and Japan. In this system, these countries had an obligation to adopt a monetary policy that maintained its external exchange rate within, so their exchange rate is at 1% because they tied this to gold and the ability of the International Monetary Fund to bridge temporary imbalances of payment. However, and during this time, the US had control of two-thirds of the world's gold, and they insisted that the Bretton Woods system rests on both gold and US dollars. But what did the US do? In 1971, the US unilaterally terminated convertibility of US dollar to gold, making the dollar a fiat money. So, supposedly, there was a reliance on gold and US dollar. Suddenly, they terminated on the dollar being reliant to gold, turned it into fiat money. So that's why eventually the Bretton Woods system was dissolved. The stock market crash as a result was a phenomenon called stagflation, in which there was a decline in economic growth and employment. Stagnation takes place alongside sharp increase in prices, or also known as inflation. The stock market crash is a combination of many factors, such as the end of the Bretton Woods system, the oil embargo from the OPEC countries, the resignation of Nixon, the president of USA because of the Watergate scandal, and the dollar devaluation due to Smithsonian aggression. So because of that, there was a stagflation from 1973 to 1974 in the US. Economists such as Friedrich Hayek and Milton Friedman argued that the government's practice of pouring money into their economies had caused inflation, increasing demand for goods. However, although the demands were for the goods were increasing, it did not necessarily increase the supply. So, because of this, more profoundly, they argue that government intervention in economies distort the proper function of the market. What emerged was a new form of economic thinking that critics labeled as neoliberalism. So this was after the Bretton Woods system. This is a counteraction to Bretton Woods system because they believe that government should not meddle with so much with the market of their country. So in neoliberalism, from the 1980s onwards, neoliberalism became a codified strategy of the U.S. Treasury Department, the World Bank, the IMF, and eventually the World Trade Organization, which was founded in 1955, to continue tariff reduction under the GATT. The policies they forwarded came to be called the Washington Consensus. So this neoliberalistic concept was um, became concrete in the Washington Consensus. The Washington Consensus dominated global economic policies from the 1980s until the early 2000s. The advocates push for minimal government spending to reduce government debt. So if you remember the Bretton Woods, it was like spending, really, government spending on infusion of money and capital for businesses and for the supplies in the country. So, in this new neoliberalist approach, minimal government spending was to reduce the government debt. Also, they pushed for the privatization of government-controlled services like water, power, communications, and transport, believing that free market can produce the best results because they believe that people of the free market are more dynamic and they really want to um, make their companies grow. They pressured governments, particularly in developing countries, to reduce tariffs and open up their economies, arguing that this is the quickest way to progress. Advocates to the consensus conceded that along the way, certain industries would be affected and die. So they call this as a shock therapy, and they said that it is necessary for long-term economic growth. Advocates of this included US President Ronald Reagan and British Prime Minister Margaret Thatcher. Despite the initial success of neoliberal politicians, the defects of the Washington Consensus became clear. A good example is that of post-communist Russia. What happened here was that after there was the after communism ended in Russia in 1990s, the IMF called the immediate privatization of of government industries. The IMF assumed that such move would free these industries from corrupt bureaucrats and pass them on to the more dynamic and independent private investors. So they were thinking that those who would buy the companies were the more dynamic and independent private investors. What they did not know is that the only individuals and groups who had accumulated wealth under the previous communist order had the money to purchase these industries. So the practice has entrenched an oligarchy that still dominates the Russian economy up to this day, because they were thinking that the previous communist people holding the major companies in Russia before um, will not be the ones to buy these companies. Little did they know that since those people were holding much money from the previous form of government they had, in this new government, they were the only ones who had the capacity to buy these products, and most of these are still corrupt people. That's why there is an oligarchy today. Um, it's controlled by certain groups of rich people, the companies in Russia. Another case of negative impact of neoliberalism happened in the US in their financial crisis of 2008 to 2009. Please watch these videos so that you'll have an idea of what these financial crisis of 2008-2009 was like. Let's now fast forward to economic globalization today. The world has become too integrated. It's undeniable that some form of international trade remains essential for countries to develop in the contemporary world. Exports, not just the local selling of goods and services, make national economies grow at present. By 2011, developing countries like the Philippines, India, China, Argentina, Brazil accounted for 51% of global exports, while the share of advanced nations, including the USA, had gone down to 45%. The World Trade Organization-led reduction of trade barriers known as trade liberalization has profoundly altered the dynamics of global economy. Economic globalization remains an uneven process, with some countries, corporations, and individuals benefiting a lot more than others. First, developed countries are often protectionist as they repeatedly refuse to lift policies that safeguard their primary products that could otherwise be overwhelmed by imports from the developing world. For example, the USA sugar industry forces consumers and sugar-dependent businesses to higher price instead of getting cheaper sugar from plantations of Central America. What does this mean? If they would just import from Central America, this could be beneficial for many Central American countries because, of course, many US consumers will buy sugar from them at a cheaper rate. So therefore, it will boost their economy. However, um, the US is forcing their consumers to only rely on their sugar, and they are not lifting their policies about that. So therefore, instead that this is an opportunity for the Central American countries for their sugar industry, they cannot benefit from it. Just like in Japan, they have a determined refusal to allow rice imports into the country to protect their farming sector. Japan's justification is that rice is secret. Again, let's say from developing countries like let's say Vietnam, they would just import from Vietnam. I think this could really help the economy of Vietnam. But no, they are not allowing importations into their country. Where countries can do very little to make economic globalization more just. Trade imbalances therefore characterize economic relations between developed and developing countries. The beneficiaries of global commerce have been mainly transnational corporations or TNCs and not the governments. These TNCs are concerned more with profits than with assisting the social programs of the government hosting them. Most countries in turn loosen tax laws, which prevent wages from rising, while sacrificing social and environmental programs that protect the underprivileged members of their societies. The term race to the bottom refers to countries lowering their labor standards, including the protection of workers' interests to lure in foreign investors seeking high profit margin at lowest cost possible. That's why in the country, many transnational corporations are investing in our country, for example, in call centers. We have so many, there's a proliferation of call centers in the Philippines because they say that we are offering cheap labor. If you go abroad, they're actually earning much more than us in terms of call centers. But us, we are earning less than what we should earn because our country is lowering their labor standards. So that's why many foreigners are going to the Philippines, investing call centers here because they say we are offering cheap labor. Governments also weaken environmental laws to attract investors, creating fatal consequences on their ecological balance and depleting them of their finite sources, finite or limited. And this is very true. It's very rampant in the Philippines. There is mining, or let's say, denudation, nudation of many forests, because again, loosening of the um, policies and laws related to the environment, just so we can the country can earn from it. That's why there are many places here in the Philippines wherein there is um, fatal level already of mining. There is nudity, denudation of different mountains and forests, and it's a very sad reality we are facing right now. This is all for the sake of earning money out of our natural resources. So that's the end of our discussion. So this is your activity. Create a mind map of the entire lesson 2. You may check online for an example of what a mind map looks like. And please submit on time. Thank you for listening.